Have you got a very mean boss and you're just thinking every day that I would like to quit my job? Or you've got this business passion, and every time you keep telling yourself that next year is good, I'll try it next year. Okay? Just in case you're thinking this is the time that I want to quit my job, in this video, I'd like to tell you 5 things you need to do before you quit your job and after you quit your job. But before we go on, I'd like to introduce myself. My name is Ola Sulaimon. I'm a chartered accountant and I'm a tax advisor and specialist in UK. And I'm the founder of Runsus Accountants. I've worked with several businesses in the last 8 years. And also, I'm the author of the Diary of the Tax Girl, and I'm writing the second book as well. So, in this video, I hope this video helps you. I know you're excited about leaving the job. So usually people just want to leave without actually thinking of what to do when you're leaving. Now, I usually say something that because someone is supposed to do the right thing by you, does not mean they can actually or they would do the right thing by you. Any employer that you tell them you're leaving should actually give you a P45 if it's in between the tax year. The tax year starts from April 6 to April 5. But usually because of the excitement, you just want to leave, you just want to move jobs, or you just want to start these new businesses, they don't give us the P45 and we don't bother actually asking. Now, if you stop your job in March, which is the end of the tax year, you won't be getting a P45, you get a P60. Now, why would you want to worry yourself about P45 when you plan to actually set up your own business? The meaning of that is until such a time that you get either of these forms, the HMRC still assume you work for that employer, and you continue to the employer will continue to show as your employer on the system. Now, why should this bother you? Especially if you are going to a new employment. The meaning of that is you'll be paying tax too much in your second employment. That new employer will be treated as your second employment. Because in UK we have tax-free amount that you can work, and every individual would have this amount. For tax year 2020-2023 is 12,570, and if you have 2 jobs, it's either you divide the tax code, your personal hours in between the 2 jobs, or you apply one main job, and then you have a BR tax code which shows you have 2 jobs in the other job. But the main thing is, if your tax code is not right, it's either you're paying too much tax, or you're underpaying tax, or you're doing something that is wrong, basically. So before you leave that job, remember to ask for your P60 if you're living at March, or if you're living in March, or P45 if you're living in between the tax year. I've said this point would be for you before you actually quit the job, because you need to think about the structure that you're going to use in running your business. I've seen so many people come to me and say, I want to register my limited company, and I'll be like, what's the name of this new business they're trying to set up? And they'll be like, oh, I've not thought about that. What should I call my business? So it does happen. You need to think about if you want it to be a sole trading business. If you don't know what that is, you can watch my other video. I'll put the link down. You need to check if you want to run it through a limited company, if you want to run the business in partnership. There are different structures of running a business, because this will determine on how you're going to pay tax. And if you're not planning, you end up paying too much tax because you're just all over the place. So before you actually finally quit the job, or just after you quit the job because you can't stand the boss again, I'll definitely say seek advice. There's loads of information online. There's loads of video on this YouTube that you can watch that will actually help you to have an understanding of what you're going into now. Because running a business itself, it's different, and if you're not careful, you'll be overwhelmed, because all your working life somebody have had to deal with your taxes, and now all of a sudden you are your own business, you are self-employed, you are a director. And what I usually say, I don't know about any other country, UK, ignorance is not an excuse. Giving the work to someone that does not know what they're doing is not an excuse. You still get penalized when you do the wrong thing because there are deadlines. There are times you need to submit your returns. There are times you need to pay the taxes. If you've got a limited company, you might have to register for VAT when your turnover is more than 85,000, or you plan that your turnover is going to be more than 85,000. So, second point in this video is think about the structure. If you don't know what to do, ask for advice. The third thing I would say that you need to do before you quit your job, or probably after you've quit your job now, is to understand how your taxes will be calculated now going on forward. I know we all like our accountants, we trust them, we believe they'll do the right thing by us. And usually I would say we are human beings as well. So you having the knowledge would help you to highlight, to be able to know that there's a problem with the tax that is being said you should pay. So always remember to ask questions. So that's not the point. The point is have an understanding of how you're going to be taxed going on forward. For example, if you're a sole trader, if you've got jobs somewhere else, you're going to be taxed based on your total income in the whole year. So even though you've paid tax in your other job, you still have to declare it in your main job because of the what we do with banding of taxes. So sometimes we pay tax at 20%, sometimes we pay tax at 40% and 45%. So HMRC is interested on your total income as a sole trader. So you need to know how it is being calculated. So let's say your turnover was £10,000 and then you then have got expenses of £5,000. The meaning of that is you're actually paying tax on the 5,000, not the 10,000. So it's like HMRC is relying on you to declare the tax to them. Meanwhile, when you were employed, it was your employer that deducted the taxes before you paid. So usually people would say, oh, so how much should I keep aside for taxes then? And I usually say something that when you get paid as a sole trader, imagine that 20% of that money does not belong to you. That's why I said imagine. The reason because most likely it's not the whole 20% because you've got expenses and therefore you'll be fine. And if you've got a limited company, most likely 90% of the money does not belong to you. So I usually advise my client, like, usually I would say put at least 10% aside. So that in case when you then have your returns prepared and then you don't have to look for the whole 20, or probably you don't have to look for 15%, probably it's just the next 5 or the next 10% you would have to look for. So at least have the thinking in your head first that all this money that was paid to me does not belong to me. £1,000 paid, no, 10% belongs to the HMRC, £200 belongs to the HMRC. But most likely because you have expenses, maybe 150 belongs to them. Okay? So have an understanding of how you're going to be paying tax going on forward. Because now all of a sudden you are in charge of administering your tax with the help of the HMRC, and they could penalize you if you do the wrong thing. Now, the fourth thing I'll say it's if you're opening a limited company, yes, you are required to do this. If you're setting up a sole trading business, it's just doing the right thing rather than compliance. So this point is when you set up the business, open a business account. I say this all the time. Like I said earlier, if you're a limited company, because the limited company is a different entity from you, the limited company has to have its own accounts. Yes, you just have to. I've noticed that in the olden days, all the banks on the streets might not open one for you, and then everybody's worried, I need to have one. But now there are loads of online banking that will open one for you, even if you have a bad credit. So for compliance, definitely a limited company must have a bank account. Now for a sole trader, you could set up one, but if you can't set up one, you then need to actually have a separate account where all your business transactions will be carried through. The reason for this is if HMRC picks on you anytime soon or never, They would ask you for your business documents. They don't expect you in 2022 to be running a business without a bank account. So they know you actually have a bank account. So, and then if you then just give them your personal account, it's almost like you've given them a gun to be able to shoot you very well. Because with all your personal transactions, they can see your lifestyle basically, which I don't really think I would want somebody else to see all the stuff I buy. So business account is very, very important, just for doing the right thing by a sole trader or a partner, but for a limited company is required. The fifth point or tip I would say in this video is record keeping. I know probably you've read about bookkeeping, but I usually tell my clients that I prefer bookkeeping and record keeping. Record keeping is almost like your story about the business. Why did you spend £10,000 buying that instrument? Do you actually use it for your personal purpose as well? So apart from actually keeping bookkeeping, I'll definitely say record keeping, because you're expected to keep your record for 6 years after the end of the tax year of the account that you're submitting. However, it's very easy for us to forget things these days. It's possible for you to forget the reason why you've actually traveled from London to Edinburgh, or why you claim the travel expenses or mileage that you've claimed. So that's why I usually say record keeping and bookkeeping as well. Record keeping is almost like your story, the things that you've done in the business, and not just for compliance reasons as well, just for your own sanity, and it helps a lot. I usually advise my clients to actually have a book somewhere or have an Excel where they won't just say, oh, the amount is £100. How did you get the £100? So that when you're ready, your accountant is not a wizard or witch. They can understand why you've actually done that transaction. Because if they don't understand, they won't make the claims for you, and that's 20p or 19p you've just thrown down the drain. So definitely I would advise you to record your journey, have good bookkeeping system. You don't have to keep the paper, please. Digital, take the picture. HMRC accept digital documents now. Take a picture of what you're doing, and then you'll be fine. So I hope this video has been very, very helpful. I run as accountants, we support businesses, we help them through the journey of making sure that their business grow, they have peace of mind, they don't have to worry about other things apart from growing their business. Thank you for watching. My name is Ola Sulaiman.